Hello and Happy New Year, everyone. It's Dada from TradeGuardian, and I wish you all the best for this brand new year, 2018. It's going to be exciting. Exciting in many ways because markets apparently are going to be moving a lot. It's called volatility, and volatility should be considered our best friend. Imagine if the market didn't move. We would have nothing to do. So the more it moves, better for us traders. On today's one, I'm going to concentrate on candlestick and candlestick formations. They have names, but we're only going to look at three most important candlestick formations, or as they're also known, candlestick patterns. Let's start from the first, number one. The sort of really thought after is called engulfing candle. And here in front of you on the chart, we have two or maybe even more, let's count them, engulfing candles. Now, let's start from the beginning. What does it mean? It means when a candlestick body fully engulfs the previous candlestick's body. And here we have a perfect example up here. This is, the black one, is the engulfing candle. Again, let's explain it properly. The body of this candle, the black one, fully engulfs the previous white candle's body. Mind the word body. Body means not those little tails, but the actual substance of the candle. The white part, the fat part, not the thin bits. So if you can really zoom into it, let's do that. Here's our engulfing candle, the black one. Why? Again, because the body of this candle, the engulfing candle, fully engulfs the previous candle's body. And that is considered to be a stroke signal. Now, another candlestick pattern, which is equally, by the way, before we go anywhere, here's another example. Body of this white candle engulfed the body of the previous black candle, and guess what happened? The market went up. And here, just now, as we speak, we are experiencing another engulfing candle. This current candle, which is painting on our screens, is fully engulfing, has engulfed now because it's finished, the previous candle. That's a signal to buy. Well, I'm not buying it because I already bought this market. This is just for the reasons of understanding candlestick patterns and their importance. Another one I'm trying to find is inside bar. Let's zoom out. Inside bar, as I'm trying to find one, means the opposite, really, of engulfing. And here we have a good example, right here. If we zoom in to there, and let's move back to find it, here, down here. See, the body of this candle is fully inside the boundaries of the previous black candle. And this is called inside bar. Bar also means a candle. It's just two different words for it. So you can call it inside candle, if that makes any better for you. So let's go over the rules of inside bar. The body of the inside bar candle should be fully inside the previous candle's body. And that is called inside bar, and it's also a very powerful signal. And the third but not last is this candle here. We call it pin bar, exhaustion candle, hammer. It has so many names, so it must be popular, right? And it is popular for a good reason. Exhaustion means, now how do we judge this as a hammer? Well, let's start from the beginning. It looks like a hammer, doesn't it? It's got this handle here and that top body, which is only a fraction of the size of a full candle. Let me fully explain. Size of this full candle would be considered all of it. So from this very top down to the bottom of the tail. That is the full size of the candle. But the body is just here. The black bit, the fat bit, is body. Now, how do we judge it's a hammer? Like I said, it looks like a hammer. But also, as a rule, as a mathematical explanation, the body of a hammer should be a tiny fraction, like you see here, of the actual size of the candle. And the bigger the tail in comparison to the body, the stronger the candle. Let me explain how this candle works. It's very fascinating. So the market, this candle opened here, or maybe here, but the market pushed it, tried to go down to here, where the tail is, but it got rejected. And it not only did get rejected, it got rejected massively. Went all the way down here, couldn't go anywhere anymore, and immediately returned here, forming this hammer, exhaustion, pin bar candle. So to me, the easiest way to call it is rejection candle, because it means rejection. Again, price went down here, couldn't stay here, got rejected and ended up here. So this is the third most powerful candlestick formation, candlestick pattern, where you get this rejection called hammer, or some call it pin bar. Well, hope this helped. Please look to your charts, into your charts, and find these three powerful candlesticks, and you'll see, you'll be surprised. Just investigate what happened after it. So for instance, here we have this hammer rejection. What happened after it? Went up. Strong signal, right? Now this is another case of inside bar. See this black bar? This body of the black bar is fully inside the previous white bar or candle. And look what happened. Market went down, completely went down. And here, what happened here? This body of this white candle, A, is actually much bigger than the previous, but also fully engulfed the previous candle's body. And that's the engulfing candle. And look what happened. Market went up and up and up. And what happened here? Engulfing candle. Fully engulfed the body of the previous candle, and market went down. Engulfing candle, market went up. Engulfing candle, I'm expecting this market to go up. Okay, that's enough for now. I hope this helps. Do investigate your own charts and find those patterns. The more you do it, the more immediately you're going to realize, okay, that's a signal, because I've seen it so many times. Again, Happy New Year, and ciao for now.